Shares in Tharisa have more than doubled over the last year or so. There are plenty of reasons for that. Here to get into some of them, or perhaps all of them, I'm joined by Phoevos Pouroulis, who's one of the driving forces behind Tharisa. Phoevos, very good to see you today.
Good to see you too, and thanks for hosting me again.
So let's just talk broadly at the beginning. Tharisa is a producer of platinum group metals and chrome. You've got a track record of production of platinum group metals and chrome that goes back quite some way, but you're expanding too. So what's it like in the space at the moment? How do you see the world of platinum and chrome production?
Yeah, we're in a very exciting period in the cycle, and I think it's a cycle unlike others that we've experienced because of this urgency that has been introduced in terms of geopolitics and the security of strategic and critical minerals. And so we're seeing that reflected in the commodity basket prices, particularly in platinum group metals, which, as we've witnessed over the last 18 months, has been a laggard to the resurgence or the surgence in gold prices, over $5,300 as we speak today. And what's pleasing to see is that platinum, with very key and critical industrial applications, is starting to re-rate and be recognized for the value, not only as a store of value, but in terms of its critical application in very unique auto catalytic, petrochemical catalytic, electronic, medical, a vast array of applications that make them irreplaceable. And due to the concentration of the resources and reserves globally, we are positioned in an optimal jurisdiction, being South Africa and Zimbabwe, the two largest geological formations for platinum and chrome. So really being in the space for more than a decade, as you say, having a proven track record with a very exciting growth profile with our Kara project in Zimbabwe is really exciting for us. And we've been saying it for 2 years. It's coming, this re-rating and this price reset is coming, and it's pleasing to see that it's materialized, and we believe there's still room for some upside. But notwithstanding that, at these price levels, it makes the platinum group metal basket a very exciting space. And we know that the investment cycle to bring a new mine or new supply online, on average, from a greenfields project is around 16 years. And you'll know from previous updates that we've been operating in Zimbabwe since 2018. And all things going according to plan, we'll be in production in the second half of next year. So you're talking about a 9-year build, greenfield build to first production. So these are not projects or opportunities that you can switch on and off on the back of macro tendencies or fundamentals. So I think our patience and our perseverance and conviction in the market fundamentals will and is paying off. If we look at the chrome space, we've always been very optimistic around the fundamentals. Again, South Africa hosting more than 75% of the world's reserves, accounting for 85% of Chinese and Indonesian input for their stainless steel industry. We just look at the growth profile, not only from an Asian perspective, but a global perspective, and we realize that really the engine room of the global stainless steel supply of chrome comes out of South Africa. And we, as one of the top 4 producers, are well recognized and have credibility. And when you look at that growth profile, we're targeting 1.6 million tons this year, and at an optimal level, once we transition to underground, hitting 2 million tons. It's a significant number. And key here is that we have longevity in our assets. These are long life, multi-generational assets. So we look at the new employees that are coming in that are educated in artificial intelligence and sectors that weren't developed or curricula that didn't exist 5 years ago. And we see the potential to scale and grow exponentially through technology, through approaching conventional challenges with different applications. So it really is an exciting time to be in an extractive mining industry that has so many applications across a broad spectrum in the world and in various industries.
Indeed. I mean, so let's just be specific for a moment now. You talked about some of the chrome numbers there. You're well embedded in the PGM space, as we alluded to at the top of the conversation, but tell us some of the numbers involved in the production of PGMs that you've got going on now, and also where you want to be in terms of the production numbers that you're looking at in the coming years.
Yeah, and that really is the exciting part of our story, and we're starting to see, as you mentioned, some recognition of that in our share price, and we're still trading at a material discount in terms of multiples to our peers, and our peers being the major platinum group metal producers who have large chrome byproduct credits. So when we look at our current state of play at the Tharisa mine, which really has been the flagship project, we are transitioning to underground in the West Pit as we speak. We're busy with that development, and that sees us getting on the western side of our mine to steady state within 3 years, but ultimately replacing the open pit ore. So we are targeting around 155 to 165,000 ounces of PGMs this financial year, 26, and then growing steadily to 200,000 ounces from the Tharisa mine. And those numbers almost mirror, obviously with different metrics, the chrome tonnage, which, as I mentioned, we're targeting 1.6 million tons now, and then gradually improving over the next 2 years, or hitting that milestone of 2 million tons. So as the bedrock and foundation for the next 60 years and beyond, we believe that Tharisa mine can deliver on a consistent basis in the lowest cost quartile, 200,000 ounces of PGMs and 2 million tons of chrome. Then the exciting growth catalyst for us is the Karo Platinum Mine, where we have been developing in a measured manner because of the capital allocation that we've put towards the project, and we've been very systematic in our approach in terms of the development there. So we've appointed our open pit mining contractor, the Spanish firm EPSA, globally renowned tier 1 open pit mining contractor, which was a real coup for us because they don't have a presence in Southern Africa, and this is their first project, and they see lots of growth opportunities. So from a professional and execution point of view, de-risks the project materially. We have been working on our infrastructure projects, water, power, reticulation. We've completed our civils on site, earthworks are complete, and we're busy with the construction of the concentrator plant. So all the pieces are in place for us to accelerate the timeline to get into first production, as I said at the outset, towards the second half of 2027. And the target there is to produce 220,000 ounces of PGMs. So doubling our PGM output from the 200,000 ounces, or currently 160,000 ounces we're targeting. So material. So it moves us into another tier of PGM producers, top 5, if I'm not mistaken, producer at those levels in Southern Africa. So very exciting growth trajectory for us.
Indeed.
Especially, yeah, sorry, Karen.
So do you think that there's any pressure on costs, though? I mean, margins obviously look like they're going to be widening and widening as these prices continue to rise. But how's the cost pressures looking to you?
So when we look at the South African context, we have a rand-based cost structure predominantly, other than the fuel inputs. We've seen oil prices being a bit soft, so we've had some relief on our diesel costs. We have the transition to underground, so we'll see our energy intensity shifting away from diesel to more electricity or electrical requirements. And so with the strengthening of the rand, we do see a margin decrease, but it's been offset by higher chrome prices. Current spot prices for March delivery over $300 a ton. Nice improvement from the year-end numbers, which were around $270, $275. And then the PGM basket price today, $3,300. A PGM basket price, over $1,200 up, $1,300 up from our year-end numbers. So significant increase in margins. But coming back to your cost question, we are, I believe, managing our costs well from an input cost perspective. But yes, invariably, when we start seeing commodity prices rallying, it does have a delayed effect in terms of your input costs. Some of those being steel and infrastructure type input costs. We haven't seen any movements there yet. And the benefit of the Kara project is a lot of the procurement has been concluded already. So 95% of our long lead items have been procured and are sitting in bonded warehouse. So those prices are locked in already. We do see some escalation in rates, in labor rates and so forth, but pretty much in line with our expectations at the moment.
I mean, it's hard to sort of overemphasize, really. It's hard to emphasize enough that you guys are really there in the thick of it. You're up and running, you're already producing, you're growing. And as we move into this very favorable pricing environment, you've already got production and you've got growth, and you're well positioned for the future.
Yeah, absolutely. And I think the other aspect is that we've got a great team and a very diverse employee base, and we have initiatives that unlock value downstream as well. And when we talk about that, we talk about our chrome stream and our PGM stream. And in that regard, we're well advanced in terms of being able to refine our own platinum group metals. At the moment, we sell a concentrate and we get a percentage of the contained metal value, that basket price that I shared earlier. So our intention is to get to a final metal to get 99% of the LME pricing of platinum, palladium, rhodium, ruthenium, etc. And we are busy demonstrating our first end-to-end commercial unit line, hopefully by the middle of this year, and then that gives us the confidence to invest in that. And the reason why we're doing it is we want to capture 15% margin that we're currently losing. And so it's very exciting when you look at that in terms of the context of the current basket price. It's a material margin that goes straight to the bottom line. And it also gives us front-facing market sales and intelligence when it comes to platinum group metals. On the chrome side, we have multiple streams, and the one that's very exciting is our long energy duration storage solution, Redox One, where we use the chrome that we produce, the concentrate, and we convert it into electrolyte iron and chromium for long duration energy storage. So these are grid scale batteries that are 100 megawatt scale type solutions, and we see a massive demand, terawatt worth of energy demand for long duration energy storage. And you don't need to be the only technology. There's such a big marketplace for it, but we need to be a stable, reliable, cost effective, environmentally friendly technology, and we're busy proving that up now. And our first 1 megawatt demonstration units will be deployed in South Africa, in the Middle East, and in Europe later this year. So very exciting, new applications, new markets, which have unbelievable demand, and we believe that this can provide a very unique solution using the chrome that we own and control to provide the very source to store the energy. So that's a very exciting initiative. And then on the other sphere of the chrome beneficiation side, we'll look at special alloys. So bypassing the ferrochrome stage, which typically is a very energy intensive, low margin industry. And we've seen the embattled ferrochrome industry in South Africa struggling with energy input costs and trying to remain competitive against Chinese sheer might of capital, technology, and developments that we've seen over the last decade. And so what this does is it bypasses that phase and goes straight to a final alloy product that's either used in stainless steel or in casting alloys or grinding media. So also an exciting initiative. And we have, I think it's a year of collaboration. We've partnered with institutions, with peers, to look at accelerating these initiatives because we believe we can get there faster through collaboration. So lots of exciting initiatives that aren't necessarily recognized when we talk about ounces and tons, but in time will unlock value and diversify our markets for us.
Yeah, it's great to see you guys prospering and humming along and growing on so many different levels. Let's spend a moment, though, thinking about the sort of broader impact that all that has on the community in which you operate. So you guys have, quite a big presence on the ground in Southern Africa. Tell us about what that means.
Yeah, listen, it's material and it really gives us purpose when we wake up every day and we realize the impact we have. So currently, we employ just over 4,500 people with contractors, and that number will grow once we get into full production in Zimbabwe. We'll employ directly over 1,000 people at the Kara project. And so it really does create a positive impact. And we look at the microcosm and economy that's created around these mining sites and the businesses that are empowered and enabled through the supply chain, through specialized procurement and preferred procurement through local community initiatives. And you visibly can see the benefit. And when we talk about the multiplier effect of every job in Southern Africa, you can multiply it by 10. So you're affecting and impacting in a positive way, almost 50,000 people a day. And that really gives us the purpose, and it talks to our benevolent intent, which is empowering futures beyond, being a good corporate citizen and doing, returning value to all stakeholders. So it is really pleasing. We have multiple social impact initiatives, from wellness campaigns. We believe in education, so we run adult education training, providing free services and training for community members, as well as our own internal career development paths. So something we're very passionate about, and we see the youth and the talent that comes through in the system, and we're really excited for the future and what it holds with unlocking of technology and different perspectives and different outlooks. So yeah, really pleased with the positive impact.
I mean, I guess you can't put a price on the creation of skilled jobs. That's just such a valuable activity for anybody to be engaged in.
And particularly in Southern Africa. In South Africa, we have a 35% unemployment rate, but if you look at that under the age of 30, it shoots up to 50%. So these are meaningful jobs, and what's key here is that they're sustainable, because we have these long life resources, and under our custodianship, we hope that we're responsible and able to take them to full maturity. So you're not talking about a contract for 5 years or building a site and then the jobs are made redundant. These are sustainable jobs into the future, which is really exciting for us.
So much to be positive about on various different levels, Phoevos. Perhaps to close us out, you could give us some sort of insight into the type of news flow we might be able to expect from the company in the current environment that we're in.
Yeah, absolutely. So I think the exciting news will be closing out on the funding for the Kara project and accelerating the development of that and giving tangible timelines to first ore in production, and the development that will progress along those lines with quarterly updates as to that progress, construction, mining, early stockpile build-up, and the employment that goes with that. So already we're seeing heightened awareness and interest in the Kara Platinum project from internally in country, from the Zimbabwean government, who are our partners, but externally as well. We've been hosting European Commission visits, US Congress visits to site. So it really has become topical, this concept of strategic stockpiling and security of raw materials. So that news flow will continue through the next 12 to 15 months. And then the development at the Tharisa mine in terms of our transition to underground, because we have been an open pit miner, successful open pit miner for the last 15 years or so, as we developed to where we are today. And so it's a shift in mining methodology, board and pillar, mechanized, efficient mining. And there are many benefits to that we believe will unlock cost efficiencies, as well as safety and environmental impact efficiency improvements. So yes, so lots of news. And then as our technologies evolve and our partnerships progress and collaboration, we should see news flow around those initiatives as well. So lots going on, very exciting. The team are very motivated, and a buoyant market certainly lifts the spirits and helps everyone see through the tough times.
Yeah, it certainly does. Well, we look forward to watching you making your progress with your growth plans and your existing production. For now, thanks very much for joining us, Phoevos.
Thank you, Alistair. Thanks to your viewers.